The seller doesn't care, or the broker doesn't care what you want. The seller only cares what they want. Hello and welcome. My name is Gino Barbaro. I am one of the co-founders of Jake and Gino, and in this how-to video, we're going to be discussing the pros and the cons of seller financing. This is an amazing topic. Do you want to know why? Because seller financing is back on the menu, boys. When Jake and I started back in 2011, seller financing was raging. There were deals on the market and there were motivated sellers, and financing was difficult to get back then, back in 2011 and 12. In fact, our very first deal had a seller carryback of 10%. Our fourth deal, fully seller financed, 80% from the bank and 20% from the seller. That deal back in August of 2015 set me free. It was an $11 million deal. And since then, Jake and myself, we've done over $20 million of deals that include seller financing. Now, we've written the book, Creative Cash with Bill Ham. This book goes over the secrets. We launched it 2 years ago. We were about a year too soon. We thought the market was going to slow down. And seller financing is an amazing tool. It's one of those tools in the toolbox. But how do you use seller financing? And when is it important to understand the power of it? If you're out there and all you're looking for is for seller finance deals, you're going to miss opportunities. The way you use seller financing is you underwrite a deal traditionally. If it doesn't make sense or doesn't work, well, then let's slide over to the seller finance side of things. And as of right now, end of 2023, the market is shifting, going more from a seller's market to a buyer's market. That's why the very first deal we did this year in 2023, the beginning, had a seller finance component. Now, the way you get seller financing over to the other side and make them understand the power of seller financing, use what we call our SPY technique. SPY. That's the acronym for the SPY technique. It's a negotiation technique. The S stands for seller. The seller doesn't care, or the broker doesn't care what you want. The seller only cares what they want. And that's how seller financing works, based on solving a problem. You, as the buyer, have to understand the pain point, the problem that the seller is having. If you don't, and you're trying to negotiate on your terms, seller financing is not going to work. You have to understand what sellers are looking for. What's their pain point? Are they burned out? Do they have another opportunity? Do they just hate multifamily? Have they run out of capital? Find out what their problem is and try to solve their problem. The P in seller finance, the SPY technique, is property. Look at the property. Does the property fit your parameters? At Jake and Gino, we always talk with the buy right parameters. What's the buy right criteria? Is that property fit your parameters? If they do, bam, great. Let's go to the why. The why is you. You are the last person or the last person in this component. Always think of yourself as last. What does the deal have to do for you? Maybe you may be able to solve the problem for the seller, but the deal still doesn't work for you. Then you pass on the deal. You do not do the deal just because it makes sense to the seller. It needs to have that win-win for the seller and for yourself. Now, why would someone want or offer or have a seller finance deal? I mean, there's some really great reasons. I've been on both ends of it. I've bought deals with seller financing, and I've also sold deals with seller financing. One of the big ones is deferring taxes. If you're taking back a note and you're not getting all of the money in the sale, well, that note is not being taxed. That's an asset to you, but it's not being taxed at that point of sale. All that's being taxed is the income that you're generating from the note itself. You want mailbox money. This is true passive income. There are a lot of operators out there, and a lot of people in the real estate space that start out buying seller finance deals. They're in the market for 10 or 15 years. They've built up a ton of equity. They have a lot of homes, a lot of small multifamilies, and then they say to themselves, I don't want to do this business anymore. They've set themselves up because now they can sell their homes on seller finance notes. Once they do that, they're collecting the mailbox money. Well, that is awesome. That's true passive income. The other one, why would they want seller finance? They don't have money to finish the project. They can't finish it. There's equity, but they don't have any way to tap in. They're not getting enough cash flow, so they want to get rid of it. They're motivated. They want to sell. They also want top price. You can't finance some of these deals right now at top prices. Banks are not giving you the loans based on the debt coverage ratio. They want the price? Good, I'll give you the price. But I want the terms. And that last one, you can't traditionally finance the deal, so you're going to a seller saying, Mr. or Mrs. Seller, you have a lot of equity. What can we do? Would you like to be able to hold part of this sale as a note? Now, what are the advantages of seller financing? There's flexibility. You can do whatever you want. This is the Wild West. You want to create a 30-year amortization, a 10-year term, interest rates that are below market. You want to have interest only for 6 months. You want to have interest only for the length of the term. You want to not pay for the six months of the note. Man, there's so much flexibility in seller financing. It's about creativity. You remember what the seller wants? The seller wants to sell, but he wants a high price. Once again, Mr. Seller, I'll give you the high price, but since this price is high, I can't pay mortgage payments for the next 6 months. How about we defer them and I don't pay any mortgage payments for the next 6 months? The creativity is amazing in seller financing. Right? Number 2, flexibility and faster transactions. These transactions can be really, really fast and you can get them done quickly. I think the last one that I would say is you need less capital to close. The less capital you need, the more equity you have for yourself. And that capital that you're putting on the sidelines, put it on the sidelines, possibly put it into the deal or keep it in reserve for that next deal that comes. Now, this is important. There's a lot of advantages, disadvantages of seller financing. That seller always has in the back of their mind, well, I'm giving this note to Gino the buyer. Do I trust Gino the buyer? I may default. And what happens when I default? I'm not paying him or her. So there's always that risk of default. And sellers can do one of two things. They can put a lien on an asset that Gino has. I remember when my mother did seller financing years and years ago, I didn't even understand the strategy. She bought something on seller finance. The seller said, you know what? I don't trust you. I'm going to put a lien on your home. Mom, what are you doing? Mom wanted to do the deal. She put a lien on her home. That's how confident she felt in paying that note for the next 12 months. It was a 12-month lien. The seller wanted to make sure for the next 12 months they got a payment, and my mom took that challenge and that risk. Now, I wouldn't advise doing that, but when a deal is too good to be true and it's too hard to pass up, sometimes you take risks. So risk of default is one disadvantage. The second one is the opportunity cost. Well, now you're a seller, you're not getting that big chunk of change. You're having it sit there. It's sitting in the bank. It's sitting, basically, you're sitting as a note. You can't access that money. You can sell that note to somebody at a discount, but you're taking less money than what you originally signed up for. So that opportunity cost is very real. And I think the third disadvantage is there's so many sellers and buyers out there that don't understand seller financing. And if you don't know how to educate the seller and the broker, it may be challenging to get seller financing across the table. That's why we wrote the book Creative Cash. I want you to email me, gino@jakeandgino.com. I want to send you a PDF copy of Creative Cash to you because it is going to be a great tool in the toolbox. I call this the hammer for the next 12 to 24 months because there's going to be a lot of opportunity with these sellers. They're going to be motivated, but all of a sudden pricing is coming down, but is pricing where it's supposed to be? It may and it may not be. One great tool in the toolbox in Creative Cash. We talk about the SPY technique as well. We talk about the 3 pillars of real estate. It's all in the book. Now, what I want you to do, thumbs up. If you like the video, give us a thumbs up. Subscribe to our YouTube channel, and I will see you on the next how-to video. Go out there and make it happen, everyone. Thanks for tuning in. If you enjoyed today's video, be sure to like and subscribe so you'll never miss another episode.